Tesla is one of the most followed stocks in the market, and yesterday it reported its earnings after the market closed. And today, Tesla's stock is down 12% at the time of recording this video, so it seems like the market wasn't too impressed with Tesla's earnings results. Tesla's stock has also been flat for basically 3 years now, and I have been asked by dozens of people to share my opinions on Tesla's stock today. So I went through the earnings and the investor presentation and found all of the key things I think investors should know and be aware of. And in today's video, I want to share all of my findings and my opinions on Tesla's stock with you. Before we get into the video though, I want to let you all know that this video is sponsored by Moomoo. Moomoo is a brokerage app that is trusted by over 22 million users around the world. The app is also great for staying on top of companies' earnings, as they have an earnings hub that gives you an overview of the business's report, conference call highlights, and the conference call audio replay. Moomoo even has their own AI that summarizes the key points from the earnings report that investors need to be aware of. Morningstar research has also been integrated into the Moomoo app. This research covers the business's estimated fair value, its moat, uncertainty score, capital allocation, and what the bulls and bears are currently saying about the stock. Additionally, Moomoo has an earnings calendar that allows you to add the earnings date of any stock directly to your calendar with one click. This is an incredibly useful tool for staying on top of when your stocks report their earnings. So if you're interested in checking out Moomoo, then make sure to use the link in my description, as it gives you an additional $30 cash rebate on your stock trades. This is on top of their existing promotion of $2,200 in rewards, plus 6% APY on cash for the first 60 days, up to a total of $10,000. You can also earn up to $1,200 when transferring money into your Moomoo portfolio. So again, make sure to click the link in my description to learn more, and thank you again to Moomoo for sponsoring today's video. Alright, so as always, I took some screenshots from Tesla's earnings report and its investor presentation, and I want to show you the highlights that I found. So right away, we can see that the total automotive revenues were down 7% year over year. However, the energy generation and storage revenue grew 100% year over year. So the energy business over at Tesla literally doubled year over year. Services and other revenue is also up 21%. And in total, the company did grow its revenue by 2% year over year. So the company is still growing its revenue because its energy and services businesses are growing very strong, but the automotive business is definitely struggling right now. And overall, this led to only 2% year over year revenue growth for Tesla. Now, if we also take a look, the operating income declined by 33% year over year, and this is because operating expenses grew 39% year over year. So Tesla's operating margin and operating income definitely dropped year over year. But what is interesting is Tesla's operating cash flow grew 18% year over year, and its free cash flow grew 34% year over year. And then lastly, down here, we can see that Tesla's cash position also grew by 33% year over year, and is now sitting on $30.7 billion in cash. So this is a pretty interesting income statement because revenue is basically not growing, operating income is down, but cash flow and cash is up year over year. So we're going to have to take a deeper look into the financial statements here. Then Tesla gives us a financial summary right here, and we can see that revenue declined partly because of reduced vehicle average selling prices. So Tesla has been continuing to decrease its average selling price per vehicle, and you could argue that this is basically Tesla having a demand issue, because you don't typically see businesses lower their prices on their products if demand is strong. Typically, businesses lower the prices of their products when demand is weak to continue generating sales. So that could be an indication that Tesla's demand for its vehicles right now is not very high. We can also see that there was a decline in vehicle deliveries. So Tesla also delivered less vehicles year over year. Now, in terms of profitability, they say that the increase in operating expenses was largely driven by AI projects. So Tesla's operating income and its operating income margin did decline year over year, mainly due to increased investments in all of its AI projects, like full self-driving, and I believe even Optimus, and the supercomputer that Tesla is building. However, these AI investments seem like they are not currently boosting the company's overall revenue and profitability, so we're going to have to see if that does end up working out for the company long term. And I know that a lot of investors do invest in Tesla's business for its future products. Like, I believe that when Optimus, it's Tesla's humanoid robot, was announced, the stock ran massively. And that's basically the stock pricing in future products today whenever they announce a new product, which in my opinion adds a lot of risk to the stock and kind of suggests that the stock could be pricing in a lot of future growth today already. And again, that's just increases the risk. All right, now moving on to the next screenshot, we can see that total production was down 14% year over year. So Tesla isn't even producing as many vehicles as it was last year. Total deliveries are also down 5%. So the automotive business over at Tesla really does seem like it is facing headwinds right now. The average selling price per vehicle is going down, total production is going down, revenue is going down, and deliveries are also going down. I don't see how this isn't really a demand problem. Like, if Tesla had strong demand, these numbers would be completely opposite. So this is a red flag for me, especially when we consider that Tesla's business today is majorly an automotive company. Over 80% of the revenues come from the automotive business. So Tesla, in my opinion, today, if I were going to invest in the company, I would want to value it as an automotive business because I don't like to pay for too much future growth or the hope of future products being successful when I am investing in a business. I want to invest in what the company actually is today, then benefit from all of that future growth. So yeah, this is not very good to see. However, we can see that storage deployed was up 158% year over year. Tesla locations are also up 20% year over year. Supercharger stations are up 23%, and supercharger connectors are up 24%. So the supercharger business is growing, supercharger network is growing. Tesla locations also grew by 20% year over year, which is also interesting to me because they have more locations around the world, but they sold less vehicles. So that actually is kind of a red flag for me. But the storage business is also growing incredibly well. Now, another thing that I like to do whenever I'm taking a look at Tesla's stock is to check out how BYD is performing. And BYD is Tesla's main competitor, in my opinion, and they are the #1 electric vehicle producer and automaker over in China. And right here, we can see that BYD sold 145,000 vehicles in June of 2024, which was an increase of 17.73% year over year. And when we compare the 17.7% increase to sales year over year for BYD versus Tesla's automotive business declining, it does kind of suggest to me that Tesla could be losing market share to some of its competitors, especially over in China, and especially to BYD. We can also see that BYD's production volume in the month of June was 141,000 cars, which is up 15.7% year over year. So BYD's actual production output is continuing to grow quite strong year over year as well, whereas Tesla's production actually declined year over year. So at least right now, it seems like BYD is actually outperforming Tesla, and this business is still growing its overall sales and production, while Tesla's is declining. And the only result there, the only logical explanation I can come to there, is that BYD is stealing some of Tesla's market share, or if you want to reverse that, you could say that Tesla is losing market share to BYD, at least right now. All right, now moving on to the next screenshot right here. This one is the income statement, and it does show us that Tesla had $890 million in revenue from automotive regulatory credits. Now, I saw a lot of people on Twitter saying that this was a very bearish point because this was a very high quarter for regulatory credits revenue. And this is basically 100% gross margin or profitable revenue for Tesla. Like, if you remove this, it directly impacts the gross margins. Then we can see that gross profits were $4.6 billion, income from operations was $1.6 billion, and net income was $1.5 billion. And what I'm seeing people say on Twitter, at least, is that these $890 million in regulatory credits revenue was more than half of the company's operating income. So if Tesla did not have this $890 million in regulatory credits, then operating income would have been in the, what would that be? The $700 million range, and would have been massively lower. So this is a bearish point that people are bringing up on Twitter. And I do think that it is worth noting that, this did, without these regulatory credits, Tesla's automotive revenues would have been even lower, and the company's overall revenue would have been lower as well. So really, this company doesn't really seem like it's growing that much as a whole. Like, the whole package of this business is not really growing that much year over year. I also found this image right here on Twitter, which shows Tesla's automotive gross margin excluding those regulatory credits. And we can see that it did peak in the first quarter of 2022 at 30%, and it has been consistently coming down almost every single quarter, all the way down to 14.6% now. And again, this is because Tesla is continuing to lower its average selling price per vehicle. And that obviously impacts the gross margin and the overall profitability margins directly. And it doesn't really seem like this has found a floor yet. And it seems like the overall trend for Tesla's automotive gross margin is still going down. And obviously, this is not what I, as an investor, want to see. I don't like to see a company's profitability going in the wrong direction and continuing to decline. Then I also wanted to take a look at some of Tesla's competitors, which are Toyota and BYD once again. And here we can see that Toyota does have a gross margin in the trailing 12 months of 20.8%, and BYD has a gross margin of 19.3%. Now, in this new quarter, Tesla does have a gross margin of about 15%, which means that Toyota and BYD now have higher gross margins than Tesla. One other thing to note about this chart right here is that BYD's and Toyota's gross margins are actually increasing, whereas Tesla's gross margin is continuing to decline. So Tesla is the clear outlier here and is seeing its profit margins continuing to shrink. This could be another indicator that the business is losing market share, or at least seeing a lack of demand, and is now having to continue lowering its prices and compressing its margins, while at the same time, its competitors are actually increasing their margins and their profitability. Now, the next screenshot right here is from Tesla's investor presentation, which shows us the trailing 12 months of some of its key metrics. And here we can see that on a trailing 12 months basis, Tesla's vehicle deliveries have been declining for the past 3 quarters now. We can also see that operating cash flow peaked in the third quarter of 2022, and it has been downtrending over the past 2 years now. And this is the same story with the company's free cash flows. Then we can also see that net income and adjusted EBITDA did top in 2022 as well, and have been coming down over the past 2 years as well. So basically, Tesla's vehicle deliveries have been declining for 3 quarters now, operating cash flow has been declining for 2 years, and net income and EBITDA have also been declining for 2 years. This does not look like a growth company to me. When I look at these metrics right here, I see a business where the sales are actually seeming like they are stalling out, revenues are hardly growing, and profitability is tanking. And this is not a good place for a business to be, at least in my own opinion. This is not at all what I like to see in my own investments. This is quite literally everything moving in the opposite direction of what a growth business actually is, which is also interesting because, as we're going to see, Tesla is selling for very, very, very high price ratios. The company is pricing in a significant amount of growth, and the business, to put it plainly right now, isn't really growing. All right, so now let's move on to Tesla's balance sheet. And right here, we can see that the company does have cash and cash equivalents of $30.7 billion and total current assets of $53 billion. Now, if we take a look at the current liabilities, they are sitting at $27.8 billion, which means that Tesla has more cash than current liabilities, which essentially means that the company has enough cash right now to wipe out all of its debts that are due within the next year. Ultimately, this means that Tesla is in a very solid financial position, and additionally, the company only has $46 billion worth of total liabilities. And again, they have $53 billion of total current assets, so the company could use all of its current assets and sell all these assets over the next year, and wipe out all of its debt and still have roughly $8 billion left over and be a totally debt-free company. So Tesla's balance sheet is actually very strong, and this is a very financially sound business. And I always love to see when a business has a strong balance sheet, so Tesla does get a green flag right there for me. Now, moving on to the cash flow statement, we can see that operating cash flow is $3.6 billion, and capital expenditures were about $2.3 billion in the quarter, so Tesla did produce about $1.3 billion of free cash flow on this quarter. So the company is actually still producing billions of dollars in free cash flow, which also adds to the business's overall financial health. Because remember, they do have a significant amount of cash on the balance sheet, they don't have a lot of debt, and the company is still producing profit. So they are in a good and strong financial position right now. So now I want to head back over to Stock Unlock really quickly, and I want to compare Tesla versus Toyota, because in my opinion, Toyota is the best automaker in the world right now. And we can see that Toyota's revenue has also been continuing to grow and actually accelerate since about 2022, and the trend is still clearly going up. Now, if we take a look at Tesla's revenue, which is this green line right here, again, we can see that the revenue is topping out and actually declining now. So Toyota's revenue is continuing to grow strongly at the same time as Tesla's revenue is topping out and starting to decline. And again, this could suggest that Toyota is taking market share directly from Tesla, and Tesla is now losing market share in the automotive industry. What's also interesting is if we take a look at these two companies' operating margins, we can see that Toyota's operating margin is now 12% and Tesla's is sitting at 7.8%. So Toyota does have higher profit margins than Tesla as well, as we saw earlier with their gross margin, but Toyota also has a significantly higher operating margin than Tesla as well. Now, if we take a look at the price to operating income of these two businesses today, and we zoom in right here, we can see that Tesla is selling for 106 times operating income today. All right, that is insane. Toyota is trading for a price to operating income of 7.8, which is literally a fraction of the price that Tesla is selling for today. And what we've also learned is that Toyota's revenue is growing more rapidly, and this business has higher profit margins than Tesla today. Yet Toyota is selling for a fraction of Tesla's price, which I think is kind of unjustified. I think it's completely irrational by the market. And it also suggests to me that Tesla is not being valued as an automotive company. If Tesla was properly being valued as an automotive company, then its price ratios would be significantly lower. And therefore, my only conclusion is that Tesla is being valued today as something more than an automotive company. And this is kind of what I was alluding to earlier on in the video when I said that Tesla introduces these new products like full self-driving and Optimus, and then the stock sees a lot of momentum and a lot of hype, even though the business hasn't even delivered an Optimus robot yet, at least from what I know, and it's not really generating any revenue or profits from that product yet. So when the stock reacts positively to these new products that are like a decade away, then it tells me that the stock is already pricing in the success of those future products. And again, Tesla is not being valued as an automotive company today, even though I believe that Tesla is an automotive company today. And the reason that I want to point this out is because whenever I talk about Tesla and I say that it's an automotive company today, the backlash that I get is that, well, hey, you can't look at this business as an automotive company. And I would kind of agree with that, but then you also have to take a look at the price of the business that you're buying. And Tesla, again, is not priced like an automotive company. So the market is not seeing this business as an automotive company, which also means that the market is disagreeing with me, and that's fine. But when you pay for future product success like this, and these products are maybe a decade away, what happens if the products fail or they don't produce profit margins or they're not nearly as profitable as someone thinks? It basically just suggests that the stock could fall massively if you're already pricing in the success of a future product today. And that's why I don't like to buy the future of businesses. I want the business to be discounted when I buy it today, and I don't want it to be selling for a significant premium. And Tesla is most definitely selling for a significant premium over what the business actually is today. So I think that there is a lot of future growth priced into this business today, and that is increasing its speculation. I think that Tesla is actually a very speculative stock, and it's increasing its overall risk. And I think that investors should know that this is a very, very risky company. And I can explain further if we go and head over to Stock Unlock's discounted cash flow calculator. So one thing I like to do on my channel is figure out what the market is currently pricing in for a business. So we're going to take a look at Tesla's operating cash flow right here, and we're going to project it out over the next 5 years. Now, if we scroll down, this is what the operating cash flow chart looks like. And basically, Tesla would have to produce $44.5 billion in operating cash flow by the year of 2029 from the $11.5 billion that the company is generating in the trailing 12 months now. So it would basically need to 4x its operating cash flow over the next 5 years just to produce a market average return right now. This tells me that Tesla is pricing in a lot of optimism. A 31% compounded annual growth rate to operating cash flow would be a significant trend change and shift for the business from what it is currently doing. Because currently, its revenues are not really growing, its profit margins are declining, its vehicle deliveries are declining, and its operating cash flows are actually declining as well. So basically, Tesla would need to flip that trend immediately and then start growing operating cash flows at 31% annually and somehow manage to 4x operating cash flow over the next 5 years just to produce a market average return today. That is way too much optimism for me to even be enticed to think about owning this stock today. Because think about this. Let's say Tesla only produces a compounded annual growth rate of 20% to its operating cash flow over the next 5 years. Well, then the compounded annual growth rate of the stock would basically be 1% annually, or essentially flat over the next 5 years, despite the business growing its operating cash flows at 20% annually, which is still a very strong growth rate. So again, I think that this stock is pricing in a lot of future growth and trading for extremely high price ratios today, and that is adding overall risk to the business, because if it does actually underperform, or if Tesla grows its cash flows at 10% annually over the next 5 years, then the stock could still decline because of how much future growth is priced into it today. So yeah, those are my thoughts on Tesla. It makes absolute sense to me why the stock is down 12% today. I'm actually surprised it's not down more. And there's no way that I would be buying this stock today. I think that it is still selling for a ridiculously high price, and I'm not going to be touching it. It's not even close to where I would want to own it. And that's just what it is. That's me being real with you guys. Those are my honest thoughts. And I think it's a very risky stock. And I think that all investors should be aware of that and know how speculative the stock is before they buy it. So looking from the outside, that is my objective opinion on this stock. So that's going to wrap up the video for today, everyone. If you did enjoy this video, then please remember to leave a like on it. I usually do get some pretty negative comments whenever I talk about Tesla this way, but man, that's just what it is. It's fine. But yeah, that's going to wrap up the video for today, everyone. Thank you so much for watching. I truly do appreciate it. And if you want to see more earnings analysis videos like this over the coming weeks, then please make sure to subscribe to my channel as well, because that would be pretty awesome. But with that being said, that's going to wrap up the video for today, and I hope to see you all again in my next video.